Today, I'm going to be answering the 10 most Googled questions that business buyers are looking up on the internet. So if you own a business and you are thinking of selling or you are selling, this is going to give you some good intel as to the types of questions that a business buyer is going to be asking you. So the first question is, you're going to be asked, why are you selling the business? And this is always, I'm brokering the sale of a business and I'm speaking to the buyers and the owner isn't speaking to the buyers. This is the first thing that they want to know, why you're selling the business. So typically that answer is going to be you're retiring or maybe you have a health problem. But while you want to be transparent, obviously you don't want it to be anything negative. So that's just something to be aware of, that they are going to want to know the reason why you're selling. The next question is, how was the business valued? And when you list a business for sale, so there's going to be two things to know here. First of all, if you're doing a private sale where you haven't engaged any professionals and you're just speaking with your own buyer, this is going to be a hard one for you to answer because you may not have done a valuation. So if you have done a valuation, which I would highly recommend, then you will be able to explain this, or the person who did the valuation will be able to explain this for you. There are a couple of different methodologies, but if there is a valuation in place, you should be able to explain it and the buyer should be able to understand it and agree with it. It should be a reasonable and a good valuation. Now, if you haven't done that, then what I do see is people handing over financials and the buyers reviewing them and coming up with their own value, which is a little bit, it's doable, but I wouldn't advise it. At the very least, have your accountant involved and make sure that your accountant, isn't just doing taxes. Make sure it's an accountant that understands the buying and selling of businesses. Okay. The next question is, what are the financial records that they need to be reviewing? And the answer is they need to be reviewing your tax returns. They need to be reviewing your financial statements from your internal system, your profit and loss statements, 3 years of those. They need to be reviewing, which by the time that there are additional documents as well, balance sheets and accounts receivable, accounts aging reports. But by the time you get to this stage, you will have provided all of this. So this is something that they are looking up to see what types of financial records they should be reviewing. So as much as you have available in the beginning, they will want to see your year-to-date profit and loss, your current balance sheet, your accounts receivable, your accounts payable. They'll want to see, like I said, 3 to 5 years of financials, tax returns, and profit and loss statements. They'll want to see your inventory list. They'll want to see pretty much everything that explains the financial health of the business and also explains to them what they're going to be buying. Okay, so this is just explaining it in layman's terms. Next question is, are there any existing debts or liabilities? And obviously, for obvious reasons, they would need to know this because the business is going to need to be sold debt-free. So you will have to take into account any debt that has to be settled before you sell the business or at the time of transfer. At the time that you sell the business, debts could be maybe you have a mortgage, maybe you have an SBA loan, maybe you have some vehicles financed. That would be debt. Let's see what else would be debt on your business. You may be financing equipment, you may be leasing equipment to own it, all kinds of debt. So you'll know the answer to that question and you'll want to be able to provide proof of that. What is the customer base and market position? That's number 5. And customer base. So what a buyer is going to be looking for in this question is they're going to be wanting to examine your customer concentration. So they're probably going to want to see a report from your QuickBooks file of your customer sales for the last 3 years so that they can just make sure that one customer isn't bringing in more than 25% of your revenue, because that's a negative. So that's why they're looking at that. And then what's your market position? How competitive are you? Have you done a good job of staying current? And how many competitors are in the market? All things that you would want to know if you were buying your business. So number 6, what are the terms of the lease or property ownership? So this is a big one. And I'm surprised that this is number 6 in terms of search? Not really, because they do want to know why you're buying, why you want to sell the business. But the terms of the lease are really important. So if you have a lease, it's going to be favorable for a buyer of your business. If the lease term is long, if they get an SBA loan, they are required to have a 10-year lease or be able to lease for up to 10 years. That's what the lenders like to see. And the other thing that is really critical is you need to read your lease if you are going to be selling your business to see if it's assignable. Landlords can be very sticky when they hear that there's going to be somebody else taking over the business, and they may actually need to be approved to take over your lease. You want to read that document carefully and get out ahead of that in the beginning, but that's what they're searching. And then property ownership. Will they be able to buy the building? Do you own the building? Is the building in a different entity? Are you going to become their landlord? These are all things that they will want to know. And then also, if you currently are paying rent on the building, are you paying it to yourself? If you own the building in a different entity, are you paying that at their market value? Because that is going to affect how your financial health looks to a buyer. Next question is, are key employees willing to stay? Usually when I first start talking with a business owner, that's one of the questions I'll ask them. And the answer, I have a questionnaire that you can fill out. And the answer is yes, no, maybe. And it's more often than not, it's a maybe. There is some concern with business owners that key employees may leave. And this is a problem. This is something that you need to have worked out. So the ideal answer is, are key employees willing to stay? The ideal answer is yes. So figuring out how, if you're a little unsure, figuring out how you're going to stabilize that so you can give a truthful yes is going to be really important to a buyer. What is included in the sale? We talked about that just a few minutes ago. They want to know what they're buying, right? What assets come with the sale of the business? Sometimes it's funny. Sometimes people are particular about things, and a buyer thinks that they are buying certain assets, and the seller decides that they want to keep some things because they see them as somewhat personal. So you want to get that list together and know exactly what you're going to be selling them so that there's no nitpicking later on in the transaction when everybody's going through due diligence or when it could become like a little bit of a fight over something. So be clear right up front what they will be buying. What are the biggest challenges facing the business? Okay, so that's something that they are Googling as a question. Google is giving them as a question that they should be asking. So what are the biggest challenges facing the business? And I think it's really good to be transparent about this. You may have been successfully ticking over at a nice steady pace within your business, but there will be challenges, and you most likely know what they are. So it's helpful to share that information so that they can know what to prepare for. And we want to make sure it's not something that greatly affects the value of the business, such as you have a couple of major contracts. Here's an example. I know of a business owner that when the DEI initiatives were turned around, when the Trump administration took over, and this business owner actually lost a $2 million contract because of that government contract. So things like that, what challenges are present in your business, they're going to want to know. And number 10, is there a non-compete agreement? The answer to this is ensure the seller won't start a competing business nearby. That protects your investment. So Google's giving some good advice there. But you will be expected to sign a non-compete. And I did see a situation once where a business owner had a small amount of ownership in a competitor, and we were able to work with the lawyers to carve that out because that was already in place. But they will not want you starting a competing business for a certain amount of time and within a certain radius of the business. So those are the top 10 questions that are being searched on Google, or Google is advising business buyers to ask.